I just, before I call the meeting in order, I just want to introduce everybody to the audit committee meeting here. First, we have from the Common Council Chair of the Finance and Claims Committee, we have Mr. James Freer. We have from Norwalk Public School Board Chair, Sherry McCready-Prichette. And then also a public citizen representative, Nate Jordan. In addition, we also have from the city side is Lamont Daniel. He is our chief of staff. We also have Jared Schmidt, who is our city CFO, and Luna Asmani, who is the Board of Ed CFO. And including myself, May Lamb, who is the comptroller for the city. And then we have our auditor, CLA, David Flint, and Gabe Epstein. So welcome everybody to this meeting. This is our ad hoc audit committee meeting for the fiscal year 2025. And I guess I should call to order this meeting now. So welcome everybody to the ad hoc audit committee meeting, April 8th, 2026, and it is 3:04 p.m. And with that, I'll do the roll call. So we have the committee member, Mr. James Freer.
Here.
Sherry McCready-Prichette.
Here.
Nate Jordan.
Here.
Ed Abrams. I know he wasn't able to make it. And with that, I just want to open up the floor before we have our auditor present their meeting to see if anybody would like to make any comments.
I would like to, if I could. Chitsame, thanks. Thanks for opening, and I'm going to be really brief. Thank you, Chitsame, for all of your work on this, on the audit. It's a lot of work you and your staff put into it. And also thanks to Gabe and Dave and the CLA team for their work and helping keep us on task in regular meetings leading up through the process. It seems like, at least to me, it seems like every year it's becoming more and more of a rarity that cities get their audits done and on time, and so it's something for us to be proud of, and so I greatly appreciate that, and of course Lunda and his staff on the Board of Ed side, because they're part of the audit too, and so just thank you to all you guys for all your work and making it successful and getting everything done on time. And then I guess I may step on Dave and Gabe here a little bit, but there are like two things that I wanted to point out within the audit to highlight. And one of them is the fund balance, which has been a struggle for us, and sort of good story, bad story here. We had originally budgeted to use 8 million. We ended up using somewhere around 5.3, and so good that we could mitigate the use of it, but hoping that we can limit that in the future. As we know, it's a big part of our credit rating. And then also taking a look at the funded ratios of our pension fund and our OPEB over 100%, and the funded ratio of the pension funds were all up pretty substantially. Keeping in mind that this is not on an actuarial basis. But still, it's they're headed in the right direction. It was a good year of returns on our investments in the pension funds. So I just want to point out those couple of things. And if I think Lunda wanted to make some introductory comments as well. And again, thanks to everybody. Really appreciate it.
Thank you. I'm not going to repeat the words of thanks that Jared has, but I echo everything he said with relation to the work that we've done with CLA. I did want to just thank CLA for two things. One is on the board, on the reporting side in general, Governmental Accounting Standards Board is the kind of like our guideline. There have been quite a few changes in what we're required to report for the Board of Ed. The most significant change was the GASB 87, which is how we report and how we account for leases. Many boards of education have been challenged with this just because we have so many leases. We have technology leases, we have leases with our students and our schools, and so when compared to cities, the Board of Ed has a lot more of reporting on that area. And thanks to CLA, you guys have been very helpful with us in accounting for those. I know other districts have actually had to spend money and hire third-party entities to account for these. And so you guys were really helpful with us as we implemented GASB 87 district-wide. So I want to thank you for that. And then two, we have quite a number of state filing requirements that we're required to do on an annual basis. You guys help us for some portions of that, which is really critical for us and for our financial reporting as well. So on those two aspects, I just want to thank CLA because we have worked very closely, collaboratively with you guys and members of my team with the state filing. As you know, state filing is not easy. We keep going back and forth with the state, but you guys have been very patient in that regard. So I did want to thank you for those two specific Board of Ed items that you help us with annually on top of the other compliments that Jared had. It's been a pleasure working with you guys and your team every year when you come on site.
Yeah, thank you. Thank you so much to you both. I will echo what Jared said. I think it was less than 50% of the municipalities in the state of Connecticut issued their audit by December 31st for 2025. You guys being a city of your size to get it issued timely year after year is definitely a big accomplishment and one that should be celebrated. So congratulations to you guys and your teams on that. Does anyone else have anything before I get started? Okay, I'm going to share my screen. Excellent. All right, so just a little agenda for today. I'm going to go over the terms of the engagement, an executive summary, some financial highlights. I'll go over both the federal and the state single audit, and then go through the management letter that we issued. So the terms of the engagement, basically, what did you hire CLA to do? We expressed an opinion on whether the basic financial statements are presented in accordance with GAAP. We also express an in relation to opinion on the schedule of expenditures of federal awards and the schedule of expenditures of state financial assistance. Basically, the numbers that we record in the state and federal single audit agree to what's recorded within the financial statements. We express an opinion on compliance related to major federal and state award programs. We provide a report on internal control over financial reporting and compliance with laws, regulations, contracts, and grants. And then finally, we provide a report on internal control over compliance related to major federal and state award programs. So the executive summary, how did you guys do? So for the financial statements, we had an unmodified opinion on the financial statements. That is, of course, the best result that can be given. That's something that should be celebrated. We did identify one significant deficiency in internal control over financial reporting. This is the same thing that we reported on for fiscal year 24, which has since been fixed, but we'll talk about that a little bit more later in the presentation. For the federal single audit, we had an unmodified opinion on the major federal programs. We had no compliance findings or findings related to internal control over compliance. And then same thing for the state single audit, unmodified opinion, no compliance findings or findings related to internal controls over compliance. So moving into the actual financial statements themselves. So looking at first the government-wide financial statements, these are kind of the statements of the entire city aggregated together. And these are performed on the full accrual basis of accounting, which means that they include both your long-term assets and your long-term debt. So you'll see right there in the 2025 column for governmental activities, we have total capital assets of $988.8 million. And then we have long-term debt below of $585.9 million. That brings us down to a total net position of $583.8 million. The majority of that is what's known as net investment in capital assets, and that's $580.3 million. And basically what the net investment in capital assets, it's an indicator of how leveraged your capital assets are. So you see we had $988.8 million of capital assets. Well, 580 million of those are free and clear of any debt. So that's great to see. We also have restricted net position of 68.9 million. 28 million of that is the OPEB asset. As Jared mentioned, the OPEB plan is fully funded and actually has an asset. So 28 million of that is for OPEB, and then the rest of that is primarily restricted funds for capital projects. And then the remainder is just your unrestricted portion, which is negative $65.4 million. It's very common to see a negative unrestricted net position on this statement, particularly in larger cities, because we're bringing on all that long-term debt. We're bringing on those pension liabilities. We're bringing on all the bonds payable. So moving ahead to the fund financial statements. Now, these are prepared on the modified accrual basis of accounting, which means they do not include your capital assets and they do not include long-term debt. The city has four major funds: the general fund, the capital projects fund, the ARPA fund, and then the Board of Education grants fund. And then you'll see the fifth column there is non-major governmental funds. That's all the other small funds that are aggregated together. So looking first at the general fund, you'll see that the general fund had a deficit of the year of $9.3 million, which brings ending fund balance to $88.4 million. Not to be alarmed there, because as Jared mentioned, $8 million was actually in the budget for use of fund balance. So we did expect a decrease in fund balance as per the 2025 budget. The capital project funds actually had a $36.7 million deficit for the year, and it is not unusual to see large surpluses or deficits within a capital project fund based on the timing of the projects. Currently, we have large projects for the Norwalk High School and the South Norwalk Neighborhood School underway, and there's timing differences in when the payments are received from the state. So currently, there's $43 million of grants receivable from the state of Connecticut for the school construction program for these projects that were not received after year end. And that's the majority of the reason why we're seeing that large deficit. So once those grants come in, you'll see that deficit be funded. We also still have a fund for the ARPA fund as we're spending down the last of those funds. You'll see that fund actually had a $617,000 surplus for the year, and that is a result of the investment income that you guys received from the ARPA funds that were invested. And that brings your ending fund balance to $1.8 million, which is really just the accumulation of that investment income over the years. There's also a Board of Education grants fund. The Board of Education grants fund had a just under $2 million deficit for the year, and that's really just due to the timing of grant receipts. Nothing to be alarmed of there, and that brings your ending fund balance to a deficit of $3.1 million. Again, just timing of grant receipts and when we recognize the revenue and related to those receivables. And then finally, your non-major governmental funds, they had a deficit of the year combined for $2.9 million, but still have a strong fund balance of $29 million. So piggybacking a little bit on what Jarrett said, some financial highlights for the general fund. Total fund balance, $88.4 million. $8.2 million of that is assigned. A small portion of that, $156,000, is just encumbrances that were encumbered in fiscal year 25 that were rolled into fiscal year 26. But the majority of that is actually $8 million of fund balance that was set aside in the 2026 budget. The rest of that is unassigned, $80.3 million, and that represents 17.8% of your 2026 general fund budget. Moving along to your proprietary funds, you have water pollution control and parking authority. Those are your two enterprise funds, basically funds that operate as a business, funds that are supposed to be self-sustaining. And both of them had very strong results for the year. Water pollution control had a $4.4 million surplus, bringing total net position to $120.2 million. And the parking authority had a $1.4 million surplus, bringing total net position to $23.1 million. Also shown here is your internal service fund, basically your insurance fund. And that fund had an $8.5 million deficit for the year, which actually brought your net position into a deficit position in total of $2 million. This is something that we've seen across the state as health insurance premiums are going through the roof. We're seeing these funds take a very large hit statewide. Looking at the pension and OPEB, this is the trust funds aggregated together, and I just wanted to make note of, you'll see at the bottom, you see the change in net position. So all the money that's invested in the pension and OPEB trusts, they actually had a change in net position of $49.5 million for the year, which is great. You'll see that net position increased to $702 million, and that is the result of very strong market results in fiscal year 25. So some financial highlights. Property tax collections were 97.5%, which is consistent to what it was in 2024, which is great. And then piggybacking on what Jared had mentioned about the pension plans, the 4 pension plans, very strong funding ratios. The employees' pension plan had a $41.5 million net pension liability, which was 85.4% funded. More importantly, that was an increase from 79.5% funded in the prior year. Fire plan had a liability of $34.6 million and is 79.8% funded, which increased from 76.3% funded last year. Police plan, $52 million liability, 76.2% funded, increased from 73.9%. And finally, the small food service plan had a $1.5 million net pension liability, which was 74.7% funded, and that increased from 71.5%. So you'll see significant increases in the funding ratios of all 4 of your pension plans in fiscal year 25 as a result of very strong market results. The city had made 100% of its required contributions into the plan. So every year you guys hire an actuary and they calculate how much you need to put into each of these plans. And the city made 100% of those contributions. And then, as I mentioned, strong investment results. The 4 plans averaged about 10.6% return on investment for fiscal year 25. Looking at the OPEB plan, the city plan had a $28.2 million asset. So as I mentioned, with all the pension plans, they actually had net liabilities. The OPEB plan has a net asset, which means you have more assets in the plan than its total calculated liability. So the plan is 122.8% funded, and that increased from 120% in the prior year. This is fantastic. The majority of the municipalities don't even have funds set aside for their OPEB plan, let alone a strong funded OPEB plan, let alone a 100% funded OPEB plan. So this is fantastic to see as these post-retirement health benefits are extremely costly to the city. And again, the city made 100% of the actuarial determined contributions into the plan, and the plan had a 13.8% gain on its investments for fiscal year 25.
Can I ask something there? If we're 122% funded, how does that work into budgeting and everything? I mean, I interpret that as being overfunded, and therefore we could save and not put money into it. And I understand that it was a really good year and all that, but how does that factor into budgeting?
Yeah, we do look at that, and we're looking at it for FY27, and not making a contribution, taking a little break from making a contribution on the city side. And we have a fairly new actuary, but we're going to also have conversations with them about maybe a different investment model, and talk to our investment advisors about that as well. Maybe coming up with a different investment model for them, because when you get to that point, and it looks like a lot, it is a lot, but there can be massive fluctuations that you got to be concerned about too. And so we're exploring, we're exploring different options, but definitely we're taking it into account in the budget, and we are not, for FY27, we're not going to make a contribution to it. So we can save some taxpayer money.
Okay, yeah, I know. I mean, I know it varies wildly when interest rates change and discount rates
Yeah,
change.
exactly.
If the interest rates go down, all of a sudden you're underfunded again, and it's like, so
Right,
anyway,
because at that point, you're only dealing with the, any normal costs related to it. And, often when there's a change on the investment side, you may have something going on the other side to offset that. But in this case, there's not really, there's not really that. So it can be very volatile.
right.
Good question.
Can I just follow up on that too? What is the value of the contribution that we're not going to make this year?
It was about 480,000, is my recollection, in that range, 450, 480, somewhere on there.
Okay.
I'm going to turn it over to Gabe Epstein, who's going to talk about the federal single audit and the state single audit.
Could I just ask a question on a couple of those items that you already
please.
ran through? On the balance on the fund balances, we have about 1,855,000 left in the ARPA, which I think you mentioned was basically the interest that we had gathered on the funds while they sat there. Is there any obligation that we have to return that back to the government?
They made an exclusion for ARPA, and the answer to that is no.
So that's available for use. Yeah.
That is available.
Okay. And then the other one was, I noticed on the enterprise fund, we talked about WPCA and the parking authority. Do we not include the golf authority in that?
No, they do their own audit, right, Chitsme? They
Yeah, they're a separate entity of the city, and they have their own audit report. We do see their audit report each year. I think we bring that up to the Finance and Claims Committee.
It's a question. Is there some reason, we don't have to get into this right now, is there some reason why we would not include that?
There's a lot of different criteria that go into what funds do get included or excluded. Sometimes we see things like the Golf Authority included as a component unit, but it really depends on a lot of different things, like their governance structure can impact what gets included or not included, depending on how that is set up, how much control and influence the city has over that. So there are a lot of different factors. I'm not sure specifically on golf off the top of my head, but we could certainly take a look at that.
Yeah, I know in the last
Well, historically, it didn't have anything it didn't have any money, but it's only been in probably about the last 2 or 3 years that they've had anywhere from a couple of hundred or 500,000 up to $1 million sitting there from time to time. And they draw it down over the year, but historically it was just they were actually in the hole. They were borrowing money to get themselves through.
Yeah, I mean, we have evaluated in the past the golf course to see if it is something that needs to be included in the city's financial statements, and that conclusion was no. It's something we could certainly revisit or discuss at a later date. But yeah, we have done that evaluation before.
Yeah, I think it's probably just been immaterial. That's all.
Do you know what their budget is?
The budget's
Probably around $1 million, if I had to
a
guess.
couple of $1 million, $3 million, something like that. I'm not sure if the top of my head. Chitsme, do you know?
Yeah, I think it's around there. I mean, I know that we don't hold their cash or anything on our end. Like I mentioned before, that they have their own federal ID, they have their own payroll system, their own employee. I think that's part of also a factor why we didn't see them as a component unit or an enterprise of the city of Norwalk Financial.
Maybe it's something we should take a look at some point.
I have a quick question. Were there any major issues with the Board of Education accounting for any of the federal and state grant audits?
Gabe's about to present in both federal and state right now. In short, no.
We good to go here?
Jim, you had any other questions, Jim?
No,
for you?
I'm good. I'm good.
Okay.
Thanks.
All right. My name's Gabe Epstein. Thank you to the committee members. Thank you to Chitsme, Jared, Lunda. I'm going to present the federal single audit here. So bottom line on total federal awards expended this year was $39.8 million. That is pretty consistent with 2024. We did have some fluctuations between the grants. ESSER for the Board of Ed dropped by about $2 million, but we saw some other grants, specifically ARPA, went up about the same amount. So we're seeing pretty consistent federal expenditures from year to year. The major programs, these are the actual grant programs that we tested the compliance for during the federal single audit. We have 3 of them, the first being Special Education Cluster. That's the IDEA grant from Connecticut State Department of Ed. We have Title I, also passed through from State Department of Ed. And we have the Magnet Schools Assistance Program, the MSAP grant. This is a grant that is direct from the federal government. It provides assured career and college experiences for students in racially isolated and economically disadvantaged neighborhoods. So those are the 3 programs that we tested, all Board of Education related this year. We had one significant deficiency in internal control over financial reporting. This does not just apply to the Board of Ed, it applies to the city. Dave touched on it briefly earlier. This is a repeat of our 2024 finding. We had the same finding in 2024. Why is it a finding again this year? Well, the city put additional controls into place over journal entries after we brought this to their attention. The city did exactly what was asked of them. However, by the time we identified that to the city when we were doing the 2024 audit, we're already in past the first quarter of fiscal year 25. So some journal entries, did occur in fiscal year 25 without those additional controls in place. Thus, the finding carries over year to year. But as long as management continues to abide by those additional controls they put in place, I would expect this to come off of the report for fiscal year 26. Basically, what this is getting at is, the Munis system was set up to allow someone to prepare and post the same entries. That's something that we see as a segregation of duties issue. The city has since put additional controls in place over that. So that is on the financial reporting side. That's controls over your actual financial statements. On the compliance side, controls over compliance with these 3 major programs we tested. We had no findings related to compliance or internal control over compliance. Dave, if you want to flip to the state side, I'll go through state. If you guys look at these actual reports, they look very, very similar, the format of them. Total state awards expended this year were $84.2 million. Back one slide. Oops. All right. There you go. 84.2 million. That is up from 73.7. Why did we see a little spike here? School construction is a big factor in that. That went up by about $6 million. You guys obviously have significant projects underway. I do want to say for the school construction grant, the amount that we report there is the amount that the city receives each year. So we report the receipts as the amount expended. That is something that the state has asked us to do. And I also want to point out that the school construction grant, the state has identified it as an exempt grant. That means that the state does not ask us to test it as a major program as part of the state single audit. That's why you're not going to see it there. Although the dollars are big, you're not going to see it there within our major programs. The state does their own, audits internally over these school construction grants. So what were our major state programs this year? We had the Magnet School Grant from State Department of Ed, Town Aid Road, that's from DOT for your roads and highways. Community Investment Fund, this is a new grant this year from Economic Community Development. That is for the Lockwood and Heather drainage improvements. We had the School Readiness Grant from Office of Early Childhood, and then from OPM, Tiered Pilot, your payments in lieu of taxes, and then the Local Capital Improvement Program, sometimes called the LOCIP grant. So pretty sizable number of grants we tested this year on the state side. As far as the findings, you're going to see the same finding on internal control over financial reporting. It is one set of financial statements underlying both the federal and the state reports. So you're going to see the same financial reporting finding there. But on the state side for compliance, same as federal, we did not have any control findings or findings related to compliance for these state programs. Any questions here on the state or federal single audits before I go to the management letter? Okay, on to the management letter. A good result this year, I would say, on the state and federal single audits too. I think, one finding where additional controls have already been implemented is a very solid result. For the management letter, what these are basically best practice comments. These are some areas we noted where improvements can be made, but the matter does not necessarily rise to the level where we would make it a finding, either a significant deficiency or material weakness, something that would go on to those single audit reports. So what did we identify as best practice advice? Your information technology controls is the first one. Some improvements we think could be made there. We just want to make sure that roles and user access are properly structured in there, that employees do not have access to more modules or the ability to edit more things than they need to perform their normal duties for their job. So making sure there's segregation of duties there within the IT system. Second item is accounting procedures manual. I do want to say that the city and Board of Ed do have their processes formally documented. They update them each year. Our recommendation here is basically to conglomerate all that into one comprehensive document. It just helps making sure we have clear controls and processes documented in one place. It also helps with succession. If somebody leaves, somebody has a wealth of knowledge and somebody new has to step into that role, it's very helpful to have everything in one place. The fraud tip line is a recommendation that the city should consider implementing a formal whistleblower policy and consider implementing an anonymous tip line, just another avenue where fraud could potentially be reported. The fourth item is fraud risk assessment. This is just being proactive. It's brainstorming about ways that fraud could occur. How could somebody steal money from the city? This is something that can be performed formally. You guys could hire an outside firm to come in and do this work and work with the departments to assess this. It's also something that could be done internally. The comptroller's office and finance sitting with the department heads and brainstorming about ways that fraud could occur. Nobody knows that better than the employees that work in these actual functions and carry out these processes and controls. Doesn't have to be something that you guys do all in one shot, but I would love to see you guys start picking off a department or two every couple months, especially those ones that have the most cash, the most assets susceptible to theft running through them. And then last is the Student Activity Fund bank recs. I think we've seen significant improvement in the way these reconciliations are done over the last few years. One thing we're still noting is there are no reconciling items recorded at year end. I do want to say that usually for these student activity funds, the reconciling items at the end of the year are pretty minimal. School is out of session by that time. So there's not a ton of activity typically at that time of year. It's just something we're noting down. It's what we would consider a best practice for all cash accounts. So those are our best practice comments, and I'll open up again if there's any questions on the management letter or any questions on the presentation or the audit in general.
I would ask, did you find that you had really good cooperation with the Board of Education finance staff in terms of completing this audit?
Yes, I think across the board, the city and the Board of Education are both fantastic to work with. Lunda is fantastic to work with. Kristen over there is also fantastic. And all the staff in the Board of Ed, they're helpful, they're responsive, they're all committed to doing what needs to be done to get this audit out on time. And you can see what the result was. So, certainly a pleasure working with them and had their full cooperation.
I had one question on the fraud assess, not the fraud assessment, but the other suggestions that you brought up. Is there would there be any value added to have an internal auditor or an internal audit function in the city, or are we just too small for something like that?
I certainly don't think you're too small. There's plenty of municipalities your size that has an internal auditor. I think you might not necessarily need to hire a full-time internal auditor. What some of your peers do is we'll hire a CPA firm to do internal audit projects, basically at the discretion of the Board of Finance or at the discretion of the finance director whenever opportunities come up, or they might pick off a couple internal audit projects per year, and they might hire a third party to do those. That's more cost effective than hiring a full-time internal auditor.
I'm also thinking about somebody that would be a financial internal audit and maybe an operational auditor that would also take a look at some of the policies and procedures we have as opposed to just strictly accounting controls.
I think certainly that's where a lot of the value would be, is looking at the operational aspects that do not necessarily come up as much, or maybe they're just not as material from a financial statement perspective. But there's definitely a lot of value on the operational side.
Have you noticed that, or anything that you could point to that say, yeah, that might be a juicy area to take a look at?
From an operational standpoint, I don't know if we're in a position to comment on that, given our responsibility to the financial statement audit.
I think where you would probably start to look maybe potentially are the areas, like I said, that have the most assets susceptible to theft, the most cash running through the funds. That's probably where you're going to get the most bang for your buck.
Agreed. Lunda.
Okay, good.
Yes, to answer your questions, Jim, I believe when I was with the city back in 2016, 15, there was a function by somebody in the finance office that did some of this work on a part-time basis. She also served as I think at the time, later became assistant budget director. With budget challenges, that role kind of went away. She did undertake some work around this. There wasn't much. I remember one of the major changes that took place had to do with Recs and Parks going cashless. Because that was an area that was kind of broad, but there wasn't a whole lot that person found, and I think they performed that task for about a year and a half, and then with budget challenges, there just wasn't that return. But just to give you some context, at one point the city did do just that, and it was recommended by the auditors, but there wasn't a whole lot for that person to do at the time.
We've seen that a lot.
Thanks for that.
Yeah, we've seen that a lot.
Go ahead.
We've seen that a lot. The internal audit position has, gone vacant. It gets posted, and then years later, it just never gets filled. It gets cut in the budget, and then before long, the position's just non-existent.
Yeah.
Those are good opportunities to potentially hire somebody to do internal audit projects on an as-needed basis.
They are expensive. It's expensive to hire an accountant who has that kind of experience and then, tack on the benefits to go along with it. It becomes very expensive and may not be worth it. So I think we have had this conversation, both Chitsme and I internally, and also talking to Dave and Gabe about it. And, what we would do is go out if we saw the need for it. When we see the need for it, is to go out and hire a firm for specific areas where we have concerns. Just for those exact reasons. I also, we had, when I was in Fairfield, we had an auditor, and you can also run into issues of, how do I say this? Conflicts where, inevitably when you're in a work environment, the relationships, and I'm not talking about like seedy relationships or anything, but you develop relationships with employees, and it sets up potentially a situation where you could have either favorable treatment of certain departments or somebody with an axe to grind with another department.
Yeah.
And ideally that wouldn't happen and everybody would be professional about it. But, in reality, sometimes those things happen and it sets up a difficult situation.
I agree with you. It's a nice thing to have, but they should be paying for themselves. And but I mean, if there was a real need for it, I think you guys would say, hey, there is an area in this particular department or something that is some maybe loose controls. They look up. They may be adequate, but they could be tightened up, something along those lines. But when you get a real clean audit and nothing shows up in the management letter and there's no internal control weaknesses other than ones that have been corrected, doesn't seem, it's hard to justify something like that.
I think that's the thing too about those fraud risk assessments, which they can be good thing to be doing, but they also can be expensive and a time suck for employees because you have to go through and evaluate all kinds of stuff, and it can be very intense for employees who've got busy jobs to begin with.
Yeah,
But
and
that's
it's
why it
hard
might be good to have targeted stuff where every once in a while you go look at something and target it.
Yeah,
It's
it doesn't
it's-
have
it's-
to be an expensive process, and yes, it will take up your employees' time, but it doesn't have to be an incredibly time-consuming project. You could look at, say, hey, where are the places in the city that handle the most cash outside of the tax office, right? You might say, oh, the transfer station, they collect a lot of cash, or Parks and Rec, they might collect a lot of cash, and you might sit down with people at Parks and Rec and say, hey, how could somebody steal, right? And then you make sure you have the controls, process, and procedures to avoid that from happening. And if there's not, then we implement process and procedures to make sure that cash is properly controlled. So I understand the comment, but I think it can be done in a cost-effective way and in a way that does not take up a lot of time. And we're in no way asking you to do the whole city in 2026 or 2027. Just asking you to start picking off areas here and there.
Okay.
It's something we recommend to all of our clients.
Yeah.
Linda, on the Board of Education side, have we ever done anything like that before?
When I was here, I believe last year, we hired PFK just because CLA are our auditor, so we went with somebody else. We did a payroll audit just to look at checks and balances with payroll, like who can who can create an employee versus who can pay the employees. And so we did a small scope project like that, where we had a third party come in and just evaluate our payroll. I think we did that about 18 months or so ago.
My suggestion, by the way, would be not just have it for the city, but it would do the city and the Board of Ed. It would just, an internal audit would cover everybody. And probably shouldn't even report to the CFO or either one of the CFOs.
No, the internal auditor would typically report to you guys.
Okay. We've got a lot of room in the budget. Can't we just squeeze another head in there?
Says no one. in
Not
2020.
even funny.
Okay, sorry.
Any other questions?
Not for me.
That sounds good.
Yeah, thank you.
Thank you.
Yeah. Well, we appreciate the time. Listen, as always, the line of communication between you guys and us doesn't always have to be the beginning and the end of the audit. If you ever guys have any questions or comments or real concerns, we could always be available for a discussion.
Just want to take this opportunity to thank the folks on the city side for helping us to craft this budget. And to remind everyone that we hope to wrap this up at our next business board meeting on April 21st.
Good luck, everybody. Well, thank you, everybody. Have a great night.
Thank you.
Thanks,
All right.
Dave.
Thank
Yeah.
you, everybody.
Thanks.
Take care.
Thanks, Al.
Okay, take care.
You too.
Motion to adjourn. All right, good night. It should be okay.
We're adjourned.
Oh, we'll adjourn it, right? It's just me and you. All right,
Bye.
bye.